This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Today, I'm defending America's national security by placing tariffs on foreign imports of steel and aluminum.
Tariffs set, but they exclude key trading partners and stocks get a lift.
Healthcare heavyweight Cigna and Express Scripts agree to a deal, marking the latest attempt to reshape that industry.
Flipping frenzy. More people are doing it, but they're also reaping smaller rewards. Those stories and more tonight on Nightly Business Report for Thursday, March 8th.
Good evening, everyone, and welcome. The president today made good on his promise to levy tariffs of 25% on imports of steel and 10% on aluminum. But he softened the blow a bit. The tariffs exclude key allies like Canada and Mexico, and they offer some flexibility for other countries. The narrower approach was cheered by Wall Street, and stocks rose into the closing bell. The Dow Jones Industrial Average added 93 points to finish at 24,895. The Nasdaq was up 31, and the S&P 500 added 12. However, those narrower tariffs sent steel stocks lower, by some significant percentage moves. Kayla Tausche is following the story for us tonight from the White House. So, Kayla, what exactly did the president put in place today?
Well, Sue, the president put in place, he signed an official proclamation that in 15 days will levy steep tariffs on all foreign steel and aluminum that are coming into the United States, except for that steel and aluminum coming in from Canada and Mexico due to that short-term exemption that you mentioned. The announcement today is the result of an 11-month investigation that has deeply divided the president's administration and led to the resignation of one of his top economic advisors, Gary Cohn. But the announcement that we saw specifically today was the result of intense lobbying over the last week by critics of a more broad approach and members of the Republican Party, as well as industry leaders opposed to this, that led to that narrower approach that we saw today. And though it takes effect in 15 days, the president said it can still be amended in the future. Take a listen.
America will remain open to modifying or removing the tariffs for individual nations as long as we can agree on a way to ensure that their products no longer threaten our security. So I've put Ambassador Lighthizer, great gentleman, in charge of negotiating with countries that seek an alternative to the steel and aluminum tariffs.
Countries are already getting in the queue. The EU trade chief has a meeting with Ambassador Lighthizer set for Saturday, and Canada and Mexico, which were quiet following the announcement, will no doubt have questions for the administration as it seeks to understand exactly what concessions the White House wants to extract in order for those exemptions to be permanent. Tyler?
All right, Kayla, thank you very much. Kayla Tausche is at the White House for us tonight. Well, the aluminum industry is hoping that the tariffs will lead to a renaissance of sorts. The president mentioned one aluminum plant in particular during today's event at the White House.
After the signing of this proclamation, Century Aluminum in Kentucky, Century is a great company, will be investing over $100 million to restart and upgrade their idled, military-grade, high-quality aluminum production, which is also critically important to our national security.
Well, Jackie DeAngelis traveled to that very plant in Hawesville, Kentucky.
Even with all the concerns over a trade war, aluminum workers are cheering. Century Aluminum in Kentucky makes high-purity aluminum. That's the kind used in U.S. fighter jets, body armor, and tanks. Aluminum has many uses. Defense is one. Century used to be part of the supply chain for defense, but the industry has struggled because of anti-competitive practices that have made it difficult to compete with the international suppliers. This facility is only operating at 40% capacity right now.
If the tariff gets passed, it's going to help us out tremendously. It's going to up our production to where we can go back to running 5 lines instead of where we're operating on 2 lines now. It's going to create more jobs for this area.
But when the green light comes, Century plans to invest $100 million in this plant, adding more than 300 jobs to get back to 100% capacity eventually. But it's a slow process. They say it'll take about 6 months to get to just 60%.
There's 1 million tons in the U.S. of aluminum capacity. There's 150,000 tons sitting out in this plant that can get restarted. So we can get this industry at least back to its ability to supply roughly 20%, maybe 30% of U.S. demand. We still need a tremendous amount of imports, but it's a start.
For those who are concerned about a trade war, the folks here say it's all about national security. They think it's important for the U.S. to have the ability and the capacity to supply the defense industry domestically.
I'm prior military myself. So for me, knowing that we produce that type of aluminum for our national defense, for one, it gives me a pride, a sense of pride in my job.
But critics of the tariffs say a potential trade war is not in the best interest of the country, and the downside risks outweigh the benefits. Still, here at Century, they believe an aluminum revival is on the way, thanks to President Trump. For Nightly Business Report, I'm Jackie DeAngelis in Hawesville, Kentucky.
While the aluminum industry here is cheering, the head of China's Aluminum Association is warning the Trump administration of the dangers of tariffs, and he's advising the Chinese government to take action.
We are not scared of a trade war because Chinese aluminum production is mainly for the domestic market. We are against protectionism, and we are against a trade war. However, if the U.S. wants one, we are not afraid.
Well, despite concerns of a trade war, there is a town in China that may be a good example of why the Trump administration wants to impose tariffs. The town was declared steel-free when its last mill was recently shut down, but production didn't stop. Eunice Yoon took a trip to Baoding to see what's really going on.
This steel mill used to be at the center of life in this town in northern China. Now it's a relic of its past as the country attempts to clean up the environment and reduce capacity. We're in Baoding, about a 3-hour drive from Beijing, and the government here declared this city steel-free back in November when the authorities visited the steel mill behind me, the last one in this town, and determined that it had been officially shut down. In its heyday, Baoding had 8 steel mills, contributing to the country's status as the world's largest steel producer. Yet China has come under criticism, including by the Trump administration, for flooding global markets with cheap steel, pressuring steelmakers in other countries like the U.S. The steel company has been all gated up, and as you can see behind me, there's no activity, but the capacity has been shifted to a firm in the south of the country. And that's why so many of China's trading partners, including the United States, are frustrated with the Chinese. Beijing may be reducing capacity here, but it's moving it elsewhere. This man worked 14 years at the plant. Now he's jobless. I've been speaking to some of the former steelworkers, and they say that they haven't been happy with the compensation. In fact, many of them blocked the road to the steel mill once they heard what they were going to get. $800 for every year employed. A big reason why China may never close steel plants as quickly as President Trump wants. For Nightly Business Report, I'm Eunice Yoon in Baoding.
And back to the markets now. J.P. Morgan's co-president warns of a deep correction in stocks over the next 2 to 3 years. He says equities could fall between 20 and 40%, essentially wiping out much of the rally of the past 2 years. And we've got a roundtable to discuss his forecast. Chris Cordaro is Chief Investment Officer at Regent Atlantic. He's a bit upbeat on the market. And our friend Jim Paulson, Chief Investment Strategist at Luthold Group, is a little bit more cautious. Gentlemen, welcome to both of you. It's not really a roundtable, but we'll call it that for effective sources here. Chris, would it surprise you to see a correction, and more than that, a bear market of 20 to 40% over the next couple of years?
Over the next couple of years, anything's possible. This year, I think with where the economic indicators are, I don't see it coming very soon. Investing in stocks, you can always have the possibility of a 20% decline. But fundamentally, we're still in a very good place.
You know, Jim, last time we had you on, you were cautious on the market, and we did see increased volatility and a downward bias in the market for a couple of weeks there. Are you still cautious on this market, and why, if so?
Yes, I am a little bit. I don't see anything like a 20 to 40% decline, Sue, mainly because I think too, that the economy is doing pretty well and is likely to continue to avoid recession over the next few years. But I think the markets are adjusting to a little higher inflation and a need to raise interest rates even more yet. We've raised the 10-year from 2.5 to 3, and I think we might raise it to 3.5 yet before the year's out. And I think wage inflation and consumer inflation is also going higher. All of those things will challenge the valuation of stocks. And even if earnings keep coming through really good, if you're paying a smaller price earnings multiple on those earnings, I think it might result in kind of a flattish market throughout much of this year. And we could continue to have volatility, but maybe not go very far for the year.
Chris, you're a little more optimistic here. You see the market going higher at a roughly 7% a year pace, though you do say that in any given year, it's possible that you get a correction of some sort. Who knows? Should I feel safe putting fresh money to work now? And if so, what are the sectors or corners of the market or regions of the globe that you like best?
Well, I think you should feel safe if it's long-term money and you have a long-term strategy. That's what you want to do. You don't want to try and have any short-term movements. That's where it's a little bit dangerous coming out with a co-president of J.P. Morgan saying there's going to be a correction. There's always going to be some decline. We just don't know when. So as a long-term investor, now's a good time to commit to a long-term strategy.
Where?
I think in the U.S. markets, but also foreign markets. Foreign markets are much cheaper than U.S. markets, and you want to be broadly diversified. If you think about other countries around the globe, their economies are just starting to come online, whereas our economy is sort of at its peak. So there are better opportunities abroad, but you want to include everything in your portfolio.
And Jim, you like commodities. How does the average investor play that, and why commodities?
Well, I would certainly own some stocks too, just like Chris suggested. I like the international markets more than the U.S. and the stock market as well. But I think as a part of the stock portfolio, you could substitute a little bit of commodities, not a huge percentage, but a small amount in lieu of holding just all equities. Mm-hmm. I think the real asset markets are going to be good this year, and commodities in particular. And it is difficult to participate, Sue, but I think the best way for individuals to do that is through an ETF. There are ETFs that try to mimic the performance of the broad-based United States commodity price indices. And I kind of think commodities are going to do better than stocks and bonds this year.
All right, gentlemen, we're going to leave it there. Chris Cordaro with Region Atlantic, thank you very much. And Jim Paulson with the Luthold Group. Thanks to you as well.
Coming up, it used to be all the rage, but is flipping houses still worth it? We'll find out. Cigna, one of the country's largest health insurers, is buying Express Scripts, one of the country's biggest pharmacy benefit managers, for $52 billion. The proposed merger is just the latest get-together in an industry undergoing massive consolidation. The deal sent shares of Express Scripts up 8.5% and Cigna down more than 11%. Bertha Coombs takes a closer look at how this combination could change the sector.
Express Scripts was the last large standalone pharmacy benefit firm. Cigna's CEO says by coordinating medical and pharmacy benefits under one roof, the $52 billion merger will help drive down health costs for the company and its clients.
Our view is that the current marketplace is not sustainable. The market demands more affordability, the market demands more personalization, the market demands more value.
It was well known that Cigna wanted to do a deal, and Express Scripts was long thought to be in play. It follows pharmacy giant CVS's $69 billion deal to acquire insurer Aetna. But this deal was a surprise.
It's not something that had been talked about in the marketplace, so I think there is a little bit of shock right now.
The Cigna and CVS mergers aim at competing head-to-head with the nation's largest health insurer, United Health, which already owns a pharmacy benefit firm and integrates benefits.
If this deal is approved, the three large PBMs will all be owned or will own a large health plan, and they control about 80% of the prescription volume in the U.S. And so if you think about it, there's 300-ish health plans out there. that will have to do business with someone that they also compete with.
Integrating health and pharmacy benefits can generate big savings by balancing prescription costs with overall health care, says Northwestern's Craig Garthwaite.
If I'm responsible for only your drug spending, I want to make sure you spend as little on your diabetes medication as possible. But if I'm responsible for all your health spending, I know that a diabetic that's not adherent to their medication is going to result in a costly inpatient hospitalization in the future. And therefore, maybe I make sure you have almost no copay on your diabetes medication.
At a time when middleman fees on prescription drugs are under attack, the key is making sure consumers see the savings.
We're going to have to keep sort of a vigilant watch on competition in this market, because just generating cost savings doesn't necessarily mean that consumers benefit.
When it comes to large employer plans, Amazon's new health venture with JP Morgan and Berkshire Hathaway is one of the driving forces for firms to prove that they can bring down costs. Cigna's CEO says he's been in touch with members of that group and thinks the Cigna Express Scripts deal will help them deliver what employers want. For Nightly Business Report, I'm Bertha Coombs, New York.
The largest U.S. supermarket chain has a disappointing quarter, and that is where we begin tonight's market focus. Kroger says profits for the full year will come in below Wall Street estimates. The company has poured a lot of money into its online operations to compete with Walmart and Amazon, but that investment is cutting into profits. And today, investors were not in a shopping mood. Trouble in aisle 6. Kroger shares fell more than 12% to $22.98. And American Eagle Outfitters offered customers big discounts for a prolonged period of time. And what did that do? Well, it hurt gross margins. The concern among analysts is that the retailer may need to rely on those discounts to keep shoppers coming back. They're hooked on them. That offset American Eagle's rise in same-store sales. Shares dropped more than 9% to $18.63.
Burlington Stores topped quarterly profit and sales expectations and issued an upbeat outlook. The CEO said its online operations continue to grow and that trends are improving at its brick and mortar locations. Investors seem to like the news, sending Burlington shares up nearly 6% to $122.86. And investors had their first chance to react to Trunk's weak quarter. After yesterday's close, the newspaper publisher reported earnings that missed Wall Street estimates. Higher than expected revenue also wasn't enough for shareholders, but the company did get the thumbs up to sell the LA Times to a billionaire. Nonetheless, shares fell 24% to $15.05. And L Brands, which owns Victoria's Secret, posted a double-digit rise in same-store sales last month. The company also authorized a new $250 million stock buyback. Nonetheless, shares of L Brands fell more than 5% to $41.62.
Mortgage rates now at a 4-year high. According to Freddie Mac, the benchmark 30-year fixed mortgage averaged 4.46% last week. Rates have gone up now for 9 straight weeks, even as yields on treasuries have bounced around.
Well, maybe it's all those TV shows, but house flipping is growing in popularity. And that's kind of curious because the returns are actually shrinking. Diana Olick tells us what's going on in that market.
All the doors and windows are replaced, front porch, our front stoop rehabbed, landscaping enhanced, and back patio and deck.
Taylor Denchfield has been flipping homes since he was 17. At 25, you could say he's a veteran.
So you basically gutted the house inside, right?
I did.
Denchfield bought this home in Silver Spring, Maryland in September, renovated it, and put it on the market last month. It sold in 2 weeks.
You have to be able to get in for a low enough price. It has to be a hot enough neighborhood, and you have to know exactly what the build is going to entail.
Denchfield is a real estate agent and a builder with a staff of contractors, so he can cut costs on all sides of a deal. He says his net return is about $100,000 per home, far more than today's average flipper. Gross flipping profits, that's without the renovation costs, came in at just over $68,000 last year nationwide, according to Atom Data Solutions. That's the highest in 18 years when they began tracking it. The dollar profit is higher, but the percentage return for investors dropped a little because the housing market is getting so expensive. Still, the number of flippers in 2017 jumped to a 10-year high, and the share of flippers using mortgages rose to a 9-year high. More people may be flipping more homes, but the risk is rising. Home prices are soaring, and there's a critical shortage of homes for sale. That makes it harder to find the perfect property to profit on.
Investors will come hungrier for deals. Their margins will get tighter, and at some point, it does not make financially sense to take all the risk of a flip, floating the entire home purchase for margins that are too tight.
That point is not here yet, but already higher competition is translating into lower returns. For Nightly Business Report, I'm Diana Olick in Silver Spring, Maryland.
And to read more about the state of house flipping, you can head to our website, nbr.com.
Coming up, leveling the playing field for women on and off the court.
Here's a look at what to watch for tomorrow. The employment report for February will be released. It's expected the 250,000 non-farm payrolls were added last month. Former pharmaceutical CEO Martin Shkreli is scheduled to be sentenced. A number of Fed officials speak on the economy, including Chicago Fed President Charles Evans. And that's what to watch for on Friday.
Venus and Serena Williams are forces to be reckoned with, of course, on the tennis court. And on this International Women's Day, they are leading the charge to close the gender gap in the workplace. Contessa Brewer talked to them about what they're doing both on and off the court.
Venus and Serena Williams have been volleying for the top spots in tennis for decades. Serena is the highest paid female athlete in the world, but ranks 51st on Forbes' list of all athletes. And Venus, who famously pushed Wimbledon for pay parity, ranks 5th among women, but doesn't even crack Forbes' top 100.
I think there's a lot happening. There's a lot more that needs to happen. Of course, in women's tennis now we have equal pay, but around the world there's still discrepancies. In tennis, we're lucky that most tournaments, not all, are equal pay, but then there's off the courts things from endorsement deals to other stuff, and that's just should be more equal. And so there's a long way to go, but I just feel like we're getting there, and you know, like Venus said, we just need other females supporting it, and we need men advocating for it as well.
The sisters faced off for practice in Madison Square Garden for tiebreak 10s, a knockout format that pits 8 top players against each other. The practice is important for Serena, who gave birth to daughter Alexis in September, and it's given her a new perspective on parental leave.
I hear some of my friends say, yeah, I got 4 weeks off when I couldn't have gone back to work in any job in 4 weeks.
As she heads to Indian Wells tennis tournament this week, Serena's juggling her career and family responsibilities, mindful of the struggles of other women.
We have to remember we're fighting for the bigger picture. We might not get it today, but we want the future to be better for maybe my daughter or her daughter, and so that's what we really are fighting for.
Both sisters say having a support system, people who believe in them and their value, has been key to their success. For Nightly Business Report, Contessa Brewer.
McDonald's is marking International Women's Day by turning its iconic logo upside down. The golden arches will be flipped to look like a W on its digital channels like Instagram, Twitter, and Facebook, and even on some of its packaging. It was also flipped at different restaurant locations. More than 62% of McDonald's employees are women.
That's pretty cool. All right, before we go, here's another look at the day on Wall Street. The Dow added 93 points to 24,895. NASDAQ up 31, and the S&P 500 added 12.
And that will do it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for watching. We'd like to remind you that this is the time of year your public television station seeks your support.
And we're grateful for that support. I'm Tyler Matheson. Thanks again, and have a great evening, everybody. We'll see you back here tomorrow.